All right, so today we're going to be taking a deep dive into India Glycols Ltd, IGL. And you've given me a ton of information on them, their second quarter FY25 financials, an investor presentation, and even some questions, some good questions.
Yeah, it's a fascinating company because they're involved in so many different things, um, from green chemicals to biofuels to even spirits.
Okay, so let's break this down for our listeners. We want to equip you all with an understanding of how IGL performed this quarter. Um, what's driving those numbers, and maybe even what it might signal about their future. Trust me, this is way more interesting than it sounds.
It is, and what makes them so interesting is they're really riding several major waves at once.
Yeah.
You have the global push for sustainability, and then you have India's own energy transition, which is happening very rapidly.
Absolutely. So let's start with the big picture here. Looking at the financials, both their standalone and consolidated revenue is up significantly year over year. In fact, their consolidated revenue jumped by 27%. Profits are also up, but those margins have tightened a bit.
Yeah, and that's what's really interesting. The revenue growth is impressive, no doubt about it. But it's important to understand where that growth is coming from. Is it sustainable? Are they raising prices? Are they selling more? Or some combination of the two? And then those shrinking margins, those require a closer look as well. Is that a sign of trouble, or is that just kind of to be expected given the current economic climate?
Yeah. Okay, so let's put on our detective hats and delve into those four main business segments that IGL operates in, starting with bio-based specialties and performance chemicals, or BSPC. Now, here they're really making a name for themselves as a world leader in creating ethylene glycol from renewable resources. You know, the stuff in antifreeze and plastics, but with a green twist.
Yeah. Traditionally, ethylene glycol is made from petroleum, so this is quite innovative what they're doing.
Yeah.
However, despite that innovation, this segment did face some headwinds this quarter.
Headwinds. Okay, so tell me about that. What's going on there?
Well, their BSPC segment reported revenue of 369 crore in Q2 FY25, which is down about 8% compared to the same period last year. And if you look at the first half of the fiscal year, revenue is only up by a marginal 3%. So clearly there's something going on there that needs further investigation.
Interesting. Okay, next up we have the biofuel segment. Now this one is a real star performer, showing massive growth. It's like they're surfing that green fuel movement wave. So tell me about this massive growth in biofuels.
Yeah, it's fueled, unintended,
Yeah.
by India's push for ethanol blending. The government wants to get to a 20% ethanol blend in petrol by ESY 25-26, and IGL is perfectly positioned to capitalize on that.
Yeah, and they've got this 3x3 strategy to navigate those often volatile ethanol prices. So what is that? Break that down.
So it's actually quite clever what they're doing. They've got three sources for their ethanol: molasses, grain, or they buy it on the open market.
Yeah.
And then they have three potential outputs for that ethanol: potable spirits, industrial chemicals, or biofuel. So this allows them to kind of adjust their sourcing and production based on what's the most profitable at any given time. And that flexibility is crucial in a market as unpredictable as ethanol.
Yeah, it's almost like they've got this intricate puzzle figured out and they're constantly shifting pieces to stay one step ahead. That's pretty impressive. All right, let's move on to their potable spirits segment. Yeah, you heard that right. A green chemical company is also a bartender.
Yeah, it might seem unexpected, but it's actually a really smart move.
Yep.
They're mostly producing country liquor and IMFL, Indian-made foreign liquor. And they've even partnered with Amrut Distilleries, which is a well-regarded whiskey maker. Maybe you've even had a sip of their single malt.
Perhaps for research purposes. So how's the segment doing?
Doing very well, actually. So in Q2, their potable spirits segment brought in 271 crore in revenue, which is a 23% jump compared to the same period last year. And that growth is thanks to strong sales of both their country liquor and IMFL brands, particularly in Uttarakhand and Uttar Pradesh.
Very interesting. Okay, last but not least, in nature biopharma.
Yeah, this is where IGL is focusing on natural ingredients for pharmaceuticals, food, cosmetics, other applications. So think things like plant-based APIs, nutraceuticals, even nicotine. They're also working on getting their Nutrafacility US FDA compliant.
What could that mean for their future?
Well, it would open up a huge market for them if they're able to get that US FDA compliant. So it really signals that they're thinking long-term and strategically about growth in this segment.
So we've got a company with its fingers in a lot of different pots. Stepping back a bit, which segments are the real winners in terms of performance and which ones are lagging behind?
Biofuel is clearly the front runner, driven by that surge in demand we talked about. They've more than doubled their revenue in this segment compared to the same period last year.
Yeah.
On the other hand, BSBC is facing some challenges. That revenue decline raises some questions about their competitiveness in that market.
And how about the other two, potable spirits and a nature biopharma?
Potable spirits is doing well, showing consistent growth. And Nature Biopharma, while it's still small, is making those strategic moves that could pay off big in the future.
So how do these segments relate to each other? Are there any synergies that we should be aware of?
Yeah, one of IGL's strengths is its integrated manufacturing approach. They can leverage their expertise in bio-based chemistry across multiple segments. For example, the ethanol they produce can be used for both their biofuels and their potable spirits.
Oh, okay. That's a great example of how they're connecting the dots. It's like a symphony of sustainability going on here, with each segment playing a part in the overall harmony.
Precisely. And that integrated approach helps them to manage costs and positions them well to adapt to changing market conditions.
Okay, so with this company playing in so many different sandboxes, what are some of the key trends that are shaping each segment's performance?
Well, for BSPC, the global demand for green chemicals is definitely a tailwind, but they're also facing increasing competition, both domestically and internationally. For biofuel, those Indian government ethanol blending targets are a huge driver. But the volatility of ethanol prices is always going to be a risk factor. Portable spirits is benefiting from rising disposable incomes and changing consumer preferences. But they'll need to stay ahead of the curve in terms of branding and product innovation. And for Nature Biopharma, the growing demand for natural ingredients is a major opportunity. But navigating that complex regulatory landscape, especially if they want to tap into that lucrative U.S. market, will be critical.
It sounds like they're in a good position to ride some of these waves, but they're going to have to be pretty nimble to navigate some of the challenges that come with them.
Yeah, agility is definitely key in today's dynamic business environment.
Absolutely. Okay, so let's move beyond the individual segments and talk about their overall commitment to sustainability. You know, IGL really emphasizes its green credentials, even calling itself, quote, India's leading green chemical company. So what makes them so green?
Hmm. I mean, they really do walk the walk. Their focus is on bio-based and carbon-smart products, meaning they're using renewable resources and minimizing their carbon footprint.
And it's not just lip service, right? They're actually making investments to back up these claims.
Absolutely. They're putting their money where their mouth is,
Mm-hmm.
with investments in things like zero liquid discharge systems at their distilleries. So that means they're not releasing wastewater into the environment. So it's a tangible demonstration of their commitment.
Okay, so they're doing a lot to be green, but how important is this green focus to their long-term strategy? Is it just a marketing tactic, or is it something deeper?
I think it's much more than just a marketing tactic for IGL. I think it's deeply embedded in their business model. They see a real opportunity to be a leader in the transition to a more sustainable chemical industry.
And are consumers and investors actually rewarding companies with this strong ESG performance? Is it translating to real business value?
Increasingly, yes. I think consumers are becoming much more aware of the environmental impact of their choices and are willing to pay a premium for sustainable products. And investors are also paying very close attention to ESG factors. And companies with strong ESG performance are often seen as less risky and more likely to succeed in the long term.
So being green is not just good for the planet, it can be good for business too.
Precisely. And IGL is betting that that trend is only going to continue to grow stronger in the years to come.
Yeah, they're definitely looking ahead, trying to anticipate where the market is heading. Speaking of the future, what clues did we find in their investor presentation about what their future plans are?
Well, they've got some exciting projects in the works. You're commissioning a new facility for value-added chemicals. They're expanding their grain-based ethanol capacity. And perhaps most intriguingly, they're working on developing new products from carbon-smart alcohol.
Wait, hold on. Carbon smart alcohol, what is that?
It is. It's pretty cutting-edge stuff. So carbon-smart alcohol is made by capturing and utilizing carbon emissions that would otherwise be released into the atmosphere. So basically turning pollution into a valuable resource.
Okay, that's pretty cool, like alchemy for the modern age. So what do these investments tell us about where they see the biggest growth opportunities?
Well, they're clearly doubling down on bio-based and sustainable products, especially in the biofuels and specialty chemicals segments. They're betting that those markets will continue to expand as demand for green alternative to traditional products grows.
And are there any potential risks or challenges on the horizon? Any storm clouds gathering?
There are always risks and challenges in business. For IGL, one key risk is the regulatory environment. Government policies regarding biofuels and green chemicals can change, and that could impact their profitability.
Right, yeah. Those are the winds they can't control. Anything else?
Another challenge is managing the volatility of raw material prices,
Hmm.
especially for ethanol. And they'll also need to stay ahead of the competition in terms of innovation and product development.
Yeah, a lot to keep an eye on. Well, let's shift gears a bit here and bring it all back to you, our listener. We've kind of laid out the landscape, but now it's time to see what it all means for you.
Because understanding this information is great, but knowing what it means for you is what really matters.
Exactly. So let's do a quick recap of the key takeaways from this first part of our deep dive.
So IGL delivered strong overall performance this quarter, but there are some lingering questions about margin pressure and the long-term impact of those external factors we talked about.
Yeah, and they seem to be well positioned to capitalize on this growing demand for green and sustainable products, but navigating that complex and changing landscape is going to be key for them.
Absolutely. Be interested to see how they address those challenges and opportunities in the coming quarters.
Speaking of interesting things, we always like to leave you with a thought-provoking question, and this one is inspired by IGL's commitment to sustainability and their diverse product portfolio. Could IGL be a model for other companies looking to transition to a more sustainable future?
That's a great question. It really makes you think about what a green transition would look like for other businesses in different industries. What kind of innovations would be needed?
Exactly. So it's something to ponder as we dive deeper into their financials and their strategic initiatives. Stay tuned for more insights and those burning listener questions that we promised to address. All right, welcome back to the show. It's time to tackle those listener questions we promised. Get ready for some real insights into IGL's performance.
Yeah, looking forward to it.
All right, first up, a listener asked about the impact of global economic conditions and commodity prices on IGL's financial performance. Things like inflation, those pesky supply chain disruptions. Are those headwinds blowing IGL off course?
Well, it's a valid concern. No company operates in a vacuum, and IGL is certainly exposed to those global economic forces.
So how are they navigating those stormy seas?
Well, their 3x3 strategy for ethanol is a prime example of their risk mitigation. Remember, 3 sources, 3 outputs. By diversifying their ethanol sourcing, they're less vulnerable to price swings in any one market.
Ah, so it's like a diversified investment portfolio, but for raw materials. Smart move.
Exactly, and they're not stopping there. IGL is also really focused on operational efficiency. They're investing in upgrading their facilities to boost productivity, keep costs in check.
So they're not just crossing their fingers and hoping for the best. They're actively managing those risks and building resilience. That's impressive.
Yeah, absolutely. That proactive approach is essential for any company trying to weather these economic uncertainties.
Okay, next question. This one is about IGL's debt levels and capital expenditure. Our listener wants to know how the company is balancing those investments in growth with managing their financial leverage. It's a delicate dance, isn't it?
Yeah, the classic balancing act of growth and financial prudence. It's a challenge for any company, especially one like IGL that's in a growth phase.
So let's take a look under the hood. What does their financial situation look like?
Well, their balance sheet shows they have been increasing their debt levels in recent years, mainly to fund those capacity expansions we discussed earlier.
Okay, so not necessarily a bad thing, right? Especially if they're investing in projects that will generate future returns.
Exactly. Debt can be a powerful tool for growth, but it needs to be kept at a manageable level. Think of it like using a credit card to invest in your business. You just need to be smart about managing those payments.
Are they managing it well?
Well, their financials indicate that their debt-to-equity ratio is still relatively healthy. And their interest coverage ratio, which measures their ability to pay interest on their debt, is also solid.
So no red flags there. They're not over-leveraged, which is good news. But they'll need to keep a close eye on that debt as they chase those growth opportunities. Wouldn't want to trip over those credit card bills.
Precisely. They need to make sure those investments generate sufficient returns to service their debt and maintain a strong financial position. It's all about finding that sweet spot between ambition and financial prudence.
Okay, now for a question that's a bit more speculative. A listener asked about the potential for IGL to spin off or list any of its business segments separately. Could we see a separate listing for, say, their potable spirits business, maybe an IPO for that Amaret whiskey?
That's an interesting thought. There's definitely a trend towards companies focusing on core competencies and divesting non-core assets. And IGL's diverse business portfolio could make them a candidate for such a move.
Yeah, I mean, spinning off a business segment could potentially unlock value for shareholders, right? But it's a complex decision with its own set of risks and downsides.
Right. They'd need to carefully consider the strategic rationale, the market conditions, the potential impact on their overall business. It's not a decision they would take lightly.
So wait and see for now.
Exactly. We'll have to watch their future announcements, investor presentations, for any hints about their strategic direction.
Okay, moving on. Another listener is curious about any new strategic initiatives or investments mentioned by IGL's management during their earnings call. Any juicy tidbits we can share?
Well, their investor presentation highlights a strong focus on expanding their presence in the value-added chemicals segment. They're commissioning a new facility for this, as we discussed earlier.
Right, and they're also ramping up their grain-based ethanol capacity, correct?
Yes, that seems to be a major area of focus.
Yeah.
They're clearly banking on the continued growth of the biofuels market in India.
And let's not forget about that carbon smart alcohol initiative. Still early days, but it's definitely got that wow factor.
Absolutely. That's a potential game changer if they can scale it up successfully. It could give them a real competitive edge in a world that's increasingly focused on decarbonization.
Okay, last listener question for this section. This one is about the stock market's reaction to IGL's Q2 FY25 earnings report. Did the market cheer, or were investors left wanting more?
Well, unfortunately, we don't have access to real-time stock market data for this deep dive.
Too bad. But we can still speculate a bit, right?
Of course. Based purely on the financial performance we've discussed, there's a mixed bag for investors to consider.
Give us the good news first.
Okay, so on the positive side, their revenue growth is strong, especially in that booming biofuels segment. And their commitment to sustainability is likely to attract those ESG-conscious investors.
And the not-so-good news.
Well, those shrinking margins are a point of concern. Investors will be looking for reassurance that IGL can manage its costs and improve profitability going forward.
So the market reaction would likely depend on how investors weigh those competing factors.
Exactly. It all boils down to expectations and how those expectations align with the actual results.
Well, speaking of expectations, let's shift our focus from the recent past to the future. What does the crystal ball say about IGL's prospects in the remaining quarters of FY25 and beyond?
Oh, if only we had a real crystal ball. But we can look for clues in the source material about where IGL sees growth opportunities, what challenges they might face. It's like reading tea leaves, but for business.
So what are the tea leaves telling us?
Well, their investor presentation highlights a few key areas. First, they're planning to commission the remaining part of their new facility for value-added chemicals by Q1 FY26. They're also expanding their grain-based ethanol capacity, aiming to increase production to 290 KLPD at their Gorakhpur plant, and an additional 180 KLPD at Kashipur.
Wow, they're not messing around with those expansions.
Nope. And there's more. They're also developing new products derived from that carbon smart alcohol, remember, turning pollution into profit.
Right, that's the one, like modern-day alchemy.
Exactly. They're still in the early stages,
Huh?
but this could be a major growth driver for them down the road.
So they've got a lot of irons in the fire, all aimed at setting themselves up for long-term growth. But are there any potential roadblocks they might encounter along the way?
Well, there are always challenges, especially in a dynamic industry like this. One key challenge will be managing the volatility of raw material prices, especially for ethanol.
Right, that ethanol price can be a roller coaster.
Exactly. They'll need to continue to leverage their 3x3 strategy to mitigate those risks.
So flexibility and adaptability will be key. Anything else they should be watching out for?
Competition is another factor. The market for bio-based and sustainable chemicals is getting more crowded. IGL will need to stay ahead of the curve in terms of innovation and product development.
It's a race to the top of the sustainability mountain.
Indeed. And they'll also need to navigate a complex regulatory landscape, both in India and internationally.
Speaking of international markets, is IGL looking to expand beyond India's borders?
Well, they're already exporting products to over 40 countries, so they have a global presence. They've even set up a subsidiary in the U.S.
They're thinking big, that's for sure.
Absolutely. They see themselves as a global player in the bio-based and sustainable chemical space.
And with their focus on innovation and their commitment to sustainability, they certainly have the potential to make those ambitions a reality.
I agree. They're definitely a company to watch.
So there you have it, part 2 of our deep dive into India Glycols Ltd. We've explored their financials, strategic initiatives, and what the future might hold.
We've uncovered some fascinating insights and answered some of your burning questions.
But we're not done yet. In the final part, we'll tackle that thought-provoking question we left you with and explore some big-picture ideas about sustainability and the future of business.
Yeah, it's going to be a thought-provoking finale. Don't miss it.
All right, welcome back to the final part of our deep dive into India Glycols Ltd. We've covered a lot of ground. Their financials, their strategies, their commitment to sustainability, and now it's time to step back and look at the bigger picture.
Yeah, it's always fascinating to connect the dots and see how individual companies fit into these larger trends that are shaping the business world.
Exactly. And remember that thought-provoking question we left you with. Could IGL be a model for other companies looking to transition to a more sustainable future?
Yeah, it's a really interesting question. I think what makes their story so compelling is that they're blending these kind of traditional businesses with this really cutting-edge green chemistry. It really challenges conventional thinking.
Yeah, it's like they're proving that sustainability isn't just about doing good, it can actually be good for business. They're finding opportunities where others might see only challenges.
Right. And it's not just about the products themselves. It's about reimagining the entire value chain, right? They're using renewable resources, minimizing waste. They're even exploring ways to capture and utilize carbon emissions. It's a really holistic approach.
Yeah, almost like they're creating this closed loop system where nothing goes to waste. It's inspiring.
It is. And this kind of circular economy thinking is going to be essential for any company that wants to be truly sustainable in the long run.
So it seems like IGL is ticking all the boxes when it comes to sustainability. But this story also raises a bigger question. Could this model be applied to even more industries, even those unexpected industries? Could we see, for example, like a sustainable fashion company also producing biofuels? Or maybe a tech giant making bio-based plastics?
Well, those are some interesting scenarios. Really sparks the imagination. I think what IGL shows is that by integrating sustainability into your core business, it opens up all kinds of opportunities. It's like cross-pollinating ideas from different industries. It can create these diverse revenue streams. So who knows? Maybe someday we'll be, sipping our morning coffee from a bio-based cup made by, our favorite social media platform.
Yeah, okay, maybe that's a bit far-fetched. But you get the point. The lines between industries are blurring, and that's creating some really exciting opportunities for companies to, make a positive impact.
Yeah, absolutely. And it's not just about the big companies, right? Small and medium-sized businesses can also play a role in this transition to a more sustainable future.
Exactly. Everyone can contribute in their own way. Which actually brings us back to IGL. They're certainly not a tiny startup anymore, but they're also not a massive multinational conglomerate. They're kind of in that sweet spot where they're big enough to make a real impact, but they're also still agile enough to adapt and innovate.
Yeah, and that's a really important point. Their story shows that you don't have to be a tech giant or a global brand to be a leader in sustainability. It's about having the vision and the commitment to make it happen.
Yeah. They're proving that any company, no matter their size or industry, can find ways to integrate sustainability into their business model. And that's a really inspiring message for anyone listening.
Absolutely. It's about changing the way we think about business, right? Moving away from that traditional take, make, dispose model and embracing a more circular, more regenerative approach.
And that shift in thinking is what's going to create a truly sustainable future. A future where businesses can thrive while also protecting the planet.
Couldn't agree more. It's about finding that balance, right? That sweet spot where economic prosperity and environmental responsibility go hand in hand.
And that's what we're all about here on the Deep Dive, exploring those complex and fascinating intersections where business and sustainability meet.
We hope you enjoyed this deep dive into the world of India Glycols Ltd.
Yeah. And we hope it sparked some new ideas and maybe inspired you to think differently about the role of business in creating a more sustainable future. So until next time, keep diving deep.